Welcome back, traders. Let's discuss how Wall Street is trading ahead of crucial events and macroeconomic data. This trading week is loaded with the Fed's policy meeting, US GDP data and more quarter reports. First, we are going to sum up the results of the previous week. As we expected, major stock indexes closed with losses. The Dow Jones shed 0.43%, the Nasdaq dropped 1.87%, and the S&P500 fell 0.93% to close at 3,961 points. However, the New York pre-market looks optimistic. The S&P500 is likely to settle above 4,000 points in the late session. Its intraday CAD is seen between 3,940 and 4,020 points. The Nasdaq incurred the heaviest losses on Friday, having slumped almost 2%. The reason is a dismal report by Snap for the second quarter, which sent shock waves across the high-tech sector. Snapchat shares plummeted 39% on a late Friday after the company had reported huge losses and stated that it would not present their revenue forecast for the third quarter. The downbeat results dragged down stocks of the high-tech giants. Alphabet and Meta slumped by more than 6%. Today, high-tech stocks are gaining ground. Apple, Amazon, Meta, Tesla and Microsoft traded higher in the pre-market. So, investors are opening this week with a cautious optimism ahead of the Fed's policy decision. The central bank is widely expected to raise interest rates as the US economy is struggling with a soaring inflation. The annual CPI rate surged 9.1% in June. The consensus suggests that the US Fed will increase the funds rate by 75 basis points, though policymakers are discussing a jumbo rate hike of 100 basis points at a time. This week, investors are alert to corporate reports by Apple, Alphabet, Visa, Microsoft, Meta, and the oil giants. Investors will focus on such reports because the regulator has sent a clear-cut message that has been priced in by markets. The scenario of a percentage point rate hike seems less realistic. If corporate records turn out to be weaker than expected, Wall Street will receive a punchy and sharply retreat downwards. Anyway, the week is going to be highly volatile. The US dollar index fell 0.36% to 106.35, following a 1% fall in the previous week. Still, the index stays not far away from its 20-year highs. The index is likely to hold in the corridor between 105.90 and 106.60. Despite bad luck at the end of the last week, the US dollar index is now 9% higher since March and 11% since the beginning of the year. The Fed's meeting is a high-impact event for the US dollar. Most analysts agree that the US Fed will increase the official funds rate by 75 basis points on a Wednesday. There is a 9% chance of a 1% rate hike. Investors will take notice of the Fed's policy statement, looking for clues to how many rate hikes will follow and whether the US economy will tolerate with such aggressive tightening. Meanwhile, the USD CAD pace is trading lower because of the strong loonie. The Canadian dollar firmed to the strongest level in 2 weeks, having it tested 1.2854 against its American rival. The intraday CAD for the pair is defined between 1.28 and 1.29. The pause in the greenbacks rally and the hawkish Bank of Canada showcase the loonie's advantage. Fresh economic data revealed welcome signs of easing inflation in Canada. The annual CPI rate accelerated to the fastest level in 39 years, though it grew less than expected. Besides, factory inflation has been going down for 3 months in a row. Retail sales increased more than projected despite a sharp growth in the consumer spending. Oil prices are climbing today after a considerable decrease on Friday. Brent crude added 0.68% to trade at $103.90 a barrel, and WTI rose 1%. Bitcoin opened a new trading week with a rapid fall after failed attempts to settle above at least $23,000. The crypto headed to $22,000. The token tumbled 4% intraday, though it remained at $22,000. Other digital tokens are also trading lower. Ethereum is struggling at about 1,500. Cardano, Solana, and Dogecoin plunged more than 4%. Interestingly, Bloomberg discovered the founders of the hedge fund Three Arrows Capital that went bankrupt. They were on the run and did not show up at the court. The partners are going to revive their business in Dubai. Despite such events in the market and the global risk aversion, UK-based financial giant Barclays is investing a decent amount in a crypto firm Cooper. All in all, both optimists and pessimists have food for thought. Bitcoin are free to move in both directions. The flagship crypto could conquer the peak of 22,000 and recover to 22,500 and $23,000. In the case of its decline, the nearest support is seen at $21,500, and it's early to speak about Bitcoin's fall to the lowest levels of June. Let me remind you about a series of high-impact events and economic data this week. Follow developments in financial markets on InstaForex TV channel. Our analysts will guide you through market turmoil this week. See you soon.